So I want to bring in our next guest here this hour to break it down with us, Chris Markowski with Markowski Investments. Thanks so much for joining us here as we get ready to close out 2024 and look to 2025.
Yeah, thanks for having me back.
Yeah, no problem. No problem. All right. So let's first talk a little bit about some of the big takeaways this year. When you look at like tech stocks, NVIDIA, just again, making a huge run. And a lot of people wondering, okay, will that maybe continue into 2025? Not only NVIDIA, but tech stocks in general.
Well, they're talking about that as a big, almost like a real important day for the NASDAQ and that entire sector is when I can't think, it's in February when NVIDIA is going to come out with their next quarter's numbers. And without a doubt, a lot hinges on that. We've been waiting for some time, and we're starting to see it to some degree, it's called breadth in the market. We're starting to see more companies, not just these the same leaders that we've had for a period of time. We're going to have more money flowing to other areas as well. And I see, it's not a bad thing. Many people have done very well in many of these high quality companies. And what I like to do, and I try to tell people to do, is I think that they're going to be great companies moving forward, but there's nothing wrong with taking some money off the table. And I'm not talking about like in a casino where you're walking away. It's where you reallocate your assets to other parts of your portfolio that might have underperformed, that are still high quality. It's that constant, it's almost you think of it as like you're being a gardener for your portfolio. You got to weed here, you got to cut here, and you got to snip here so you can see the type of growth that you'd like to see over the long term. It's not an all in or all out approach. Again, take advantage of all these companies that have done very, very well by taking some profits.
And I think for a lot of people, that might be the hard thing to do, because now we live in this world where it's like they want to see the immediate return right away. You got these people that are on Reddit and, talking about GameStop and all this madness that happened in 2021 and, this roaring kitty when he tries to make a post there. I mean, what do you think about these types of people when they're doing this and they feel like they're creating this movement, but at the same time, it's not the technicals that's moving this thing?
Yeah, it's funny. You mentioned that. It was actually an article in the Wall Street Journal talking about, because of all of the trading apps, it's now people are turning the markets into a casino. I'm going to explain something to everybody. Get rich quick con artist is the world's second oldest profession. We all know what the oldest is. It is the world's second oldest profession, with people trying to get rich, or people trying to kind of convince you that you can get rich quick. You want to know who's making a lot of money off this? Is the people that are the facilitators, the Ken Griffins of the world, the Citadels that are making a fortune off of everybody out there thinking that, oh, geez, I am going to be a wizard trader overnight. If you think that that's how we've done it and how Buffett's done it and how all of these great investors throughout time, Druckenmiller, you think that they've done it quick overnight? No, it doesn't work this way. You need to get rich slow. That's how you do it. Letting compounding work its magic over time. Try it as you might. Okay, but again, you can turn the markets into a casino, or you can turn the markets into a vehicle of making wealth.
Yeah, no doubt about that. I mean, sometimes I just want to look at like some of these out of these calls, really areas of, when we're talking about like GameStop and talking about, AMC and those others, the way that these out of the money calls are in, it's like, folks, it's like 500% out of the ballpark, and you're betting on it.
Yeah, blow on a dice and throw. And it's basically what it is. And again, some people go to casinos. I'm one that's not my thing. I don't gamble. And they win from time to time. But the reality is the casinos stay in business because they're the real winners in this. Again, don't treat your hard-earned assets like that. You want to speculate in something, that's fine, as long as that you understand that what you're speculating on, if you lose it, it's not going to bother you. Like I said, gambling is not my thing. But for some people that like to go and gamble, they take a amount of money that they can afford. They go to the casino. They make money. If they lose, it's entertainment money to them. That's how you should handle speculation. You can't be doing that with your entire portfolio. Again, I've been doing this for 30 years. And the amount of people that have let risk lead to ruin in their portfolios is extraordinary. Don't do that.
Yeah, that's one good tip to end the year and start with once again. As we look forward to the new year, obviously it's going to be a new administration coming in here. And first off, I want to get your take here on really the thoughts of maybe the tariff wars that might happen when Donald Trump is inaugurated and starts what he was talking about when he was campaigning. How's that going to look?
Well, everything that's happening right now is pure speculation. We're obviously seeing, we just what Canada has been doing as of late and what other countries may do to react to some of the pressure that we are going to bring to bear because of this. So again, we're going to have to wait and see what tariffs are put on what at that point in time. As far as the overall economy moving forward, we're starting to see numbers that I knew were ridiculous. The jobs numbers, economic numbers that are being thrown out that are constantly being revised over the past 2 years. As a matter of fact, the strength of the overall economy is not what they were making it out to be by any stretch of the imagination. And the Trump administration, they got a bit of a mess they've got to deal with moving forward. We see it in everyday lives. We're still dealing with inflation. The Fed makes no sense whatsoever. Inflation is hot, but yet they're lowering rates. Never happened before, ever, where the Federal Reserve has actually lowered by 100 basis points and the 10-year has gone in the opposite direction by 100 basis points. Never seen that happen before. It's never happened. So we've got issues that we've got to deal with moving forward. I think some of the things that they're putting forward in regards to trying to get the economy on that animal spirits type footing again, getting rid of government regulations, getting people excited about building and creating and investing again, not just with the big tech companies that are out there, but across the board. Small business is the growth engine for jobs in this country. It is what it is. The majority of jobs created are done by companies that are 5 years old and younger. And we've got to get them excited about building and creating again.
I think one of the big takeaways that I know a lot of businesses are looking forward to is the takedown and maybe the lessening of regulations. Regulations just kill businesses, and really it just takes them sometimes forever just to get a contract through because they're waiting and waiting and waiting on something that, with all this red tape, so much red tape in government, we know, but if they could lessen that, it could really, jumpstart, a lot of businesses.
Well, it's a factor, not to mention the fact, they take a look at it as almost like an entrepreneur, a small business owner out there, and they've got all of these regulations that they've got to deal with. And not to mention, they got to deal with the government that's changing them all the time, making it more difficult to go out there and build and create. We need to have, like I said, I've talked about this before. It's almost like a Steve Jobs type of model for our overall economy. Keep it simple. Keep it as simple as possible. You open up, your iPhone. There's no massive instruction manual in there. You open up your Mac. There's no massive instruction manual in there. It's ease of use. And when we have a federal registry that's, hundreds of thousands of pages long, a tax code that's over 80,000 pages long, technically, that's the instruction manual for this country. That's not conducive to building and creating. We want people to go out there and take risks. That's really the true great thing about this country is we encourage people to go out and take risks. The government has been getting in the way of that. We need to get the bureaucracy out of the way.
And lastly, Chris, a lot of people wanting to know, okay, what is the forecast going to look like maybe for mortgage rates? It looks like it's going to end the same way it started this year at 6.8%. What are we looking at for 2025? I know a lot of people, if they see 6.8%, 7%, they're like, I got a 2.5%, maybe 3%. I'm not selling.
No, that's a part of it. Why people are not. A lot of people looking to downsize are saying to themselves, well, I'm not going to do that. I'm not going to move out of this house. There's also the aspect as well where you also have property taxes, which are very high in certain areas. And if they move, they're going to get reset at a higher rate no matter where they're going to go. That's a problem as well. I like to call that golden handcuffs. in many respects. And that's why we're not seeing a lot of movement in the overall real estate space. I don't expect mortgage rates going down much from here. That period of time where they were, at ridiculously low levels below 3%, that was a bit of an anomaly. Many young people looking at this, while, mortgage rates are really high. Again, I'm dating myself, in decades. I'm an old man now. My first mortgage was much higher. And that was a long time ago. And that's just a reality that people are going to have to deal with. And actually, the cost of homes are going to have to adjust to the downside because of that.
Yeah, that's a solid point there because, back there was mortgage rates 15, 18%.
Yeah. Yeah, again, we lived in a rarefied air for a point in time. We got to have more inventory, and then we'll start seeing the prices come back down.
What I think is so interesting, too, though, especially where I'm at right now, Arizona, they are still just putting so much apartments. That is just really flooding the area of where you see an open area. There goes an apartment.
Well, that's obviously good for, obviously the cost of homes and keeping them down. We've got this weird idea here that, we need to build up so much wealth into our homes and the price of homes needs to continue to go up. I could care less, whether my home goes up or down. It doesn't make any difference. I'd rather see prices down because then people have more disposable income to go out and spend and do other things. Treat your home what it is. It's a place to create memories. Don't treat it as an investment vehicle.
Yeah, so true, because, that is the one thing. It's not like you're going in and out of places. Yeah. It's a home. You got to have the memories there.
That's right. Again, people do that all the time. They convince themselves, hey, look what it was. I bought it here, and look what it's worth 10, 20 years down the road. Yeah, but you had to repaint, you had to pay taxes, you had to pay this and the upkeep. No, it's a place that you need to live in, and people have got to grasp that.
Yeah, that's so true. And I think what you always talk about, too, is you can't time the market, right? Everyone looks like, I should have got in then, or I should have sold then. You know what it's called? I bet you tell them, zoom out a little bit.
Yeah. That's very true. And what you have to say is people think they're going to get in at the exact bottom and out at the exact top. That's a complete exercise in futility. Nobody's ever been able to do that.
So true. So true. Chris Markowski, thanks so much for joining us on Live Now from Fox. You have a great end of the year and a great new year.
As well. Look forward to seeing you next year.
Yes, absolutely. Take care.